My name's Phillip Sweetenham. I work for a company called SunGuard, and my job there is installing credit risk systems for banks. What can you tell me about the credit crunch? Banks are supposed to be experts at handling money, handing out money, lending it to people, get it back in, that's great, but it's risky. And there are two big risks that banks need to manage. They're called credit risk and market risk. Market risk is basically saying you don't know how the price of the different things you're dealing with is going to change in the future. You do know how much it changed over the last few years. Suppose things got as bad as they ever did recently, how much might you lose? I've been very fortunate in my working career ever since then, having done a degree in mathematics. It's always been a major theme in my work, both doing modelling of chemical reactions and later modelling of genetic risk and now of financial risk. So this wiggly line here is how the pound-dollar exchange rate has changed over the last year. Some sort of general pattern going up and down quite rapidly called a random walk. And the sort of mathematics that I and my colleagues use is to simulate, say, 5,000 different ways in which the pound-dollar exchange rate could change over the period of a year, and say, in all those cases, what's the most I would lose if the person I've just done business with then goes out, then stops trading?